I want to make this video, to be honest, and tell you guys about the largest loss I'm ever seeing on a single trade. As you guys know, Ethereum, we put in this trade months ago. I want to talk about today if I'm wrong, if I'm just early, and if this is going to be working out in the long run. And more importantly, what I'm doing in this moment, because it sucks. It sucks to see something not work out, not pay you. But 3 months ago, we spotted this opportunity, put it on YouTube for one simple reason. It's nice to be transparent. But what I'm finding is the best opportunities long term, the best entries, you're in early. You're spotting it early, and sometimes you can really mess it up with the wrong trade too early, which I'll explain later. But we're going to discuss the plan, the strategy, and honestly, the big opportunity that still is in front of us around Ethereum. Because being in early, as we saw from the Tesla trade years ago on this YouTube channel, was a blessing. We had to wait 4 months, but it went up 150%. So it's nice. There are some perks to being in early, but there's also some frustrations. And I want to show you the biggest mistakes I learned from being early. Because this trade I am in early, but honestly I'm making a lot less mistakes from the previous times. So here's the idea. The number one way to be in early is to be in small and position in slowly. This is my favorite approach if you pair it with one other strategy. The reason why is because you can build a large, heavy position over an extended period of time and then just sit. Just wait. You don't have to do much after that sizing period is done. The big mistake I make, you might make, we all make a little bit of, is we buy leaps when we see bottoms. And it takes so long to bottom a stock and a trade. And leaps don't have the time to be wrong, unfortunately. So leaps, what I've learned from my past biggest trades like Ethereum or like Tesla, is you want to buy those leaps towards the end of your accumulation phase. So if you're slowly sizing into a play, you want to be much slower on the leaps, but you want to speed up the rate of buying later. And I'll talk about what that looks like. Basically, here are the 3 buckets I would look at when I'm looking at Ethereum. And from 10 years of trading and from some of my best single trades given on this YouTube channel with Tesla and Bitcoin just as public trades, this is the same phase of staggering I used. I made mistakes in the past personally, but this time I'm doing it really methodically and well. And I want to show you how. ETH is non-leveraged Ethereum. Basically, it is the coin Ethereum, just in an ETF. ETH is a 2x ETF that tracks Ethereum. So if Ethereum moves up 50%, this moves up 100. If you sell a put option, instead of making 2%, you make 5%. So this is a golden hack for option selling, for buying stock at the right moment. And this is the hack we use inside our coaching program that has helped us win over the last year, 100% win rate. And we got assigned 2 trades recently, one being Ethereum, and it's down 30%. But the beauty is you can always hold and accumulate. You never have to lock in a loss with the first 2 on the list. ETH, it's very hard to lock in huge losses on that. ETH, a little bit easier, but leaps are obviously the easiest to have huge losses. And that's why you want to size those up smaller and build them up over time. So here's month 2. Let's say we bottom in a trade. Just like that Tesla chart, we see a bottom. Maybe it was that candle. And I thought that was it. Honestly, back in the day for Tesla, I thought that was the bottom on that candle here. But it took 4 more months, maybe 5. And what I realized is I need to be way more patient next time I buy a bottom, which means most of my money is hammering ETH. I don't want to have too much leverage. If I want to build my biggest position, which might be 50% of my net worth, maybe 30% of my liquid net worth, that's heavy. And you don't want to have too much leverage on the first or second month in a big play, especially when you're counter trend, when the markets are down, when things are cheap. You don't want to be too heavy on these bottoming leverage opportunities. That's why 10% on ETH, that's fine. 1% on Leaps, that's fine. Because what you want to do is increase those two leverage moves in month 4. So month 3 or 4, you're slowly adding to the ETH, the Leaps bucket, because you're going to fill out your non-leveraged bucket. This is the number one thing to fill out the quickest because it doesn't have time decay. It doesn't have this leverage decay from being a leveraged ETF. It's just stock. It's like holding Google when it was at $1. It's like holding Amazon when it was at $5. You name some of the best investments in history. You don't have to get stopped out or uncomfortable with these trades because there's no leverage. That's why I love it. But there's plenty of upside and volatility where non-leveraged assets can make you plenty of money. In fact, over the past 3 months, we've seen MU, just a normal stock, triple in price. We've seen Google and Nvidia even go up substantially in the past couple months. So non-leveraged is not something we should be taking out of our portfolio. We should be using some sort of those assets if they have the right volatility. But here's the key. About 6 months into a bottom, that's probably the highest likelihood bottom in the time you want to be absolutely in the most leveraged vehicles now. So this means ETH, this means Leaps. We want to build up to what we're comfortable holding. What we've written out on a napkin is what we want to build into. And that's great to build into by month 6, but think about it like an exponential curve. You start slow, you get faster and faster and faster, and eventually you're at your max by the end of it. But you're going to be kind of more linear building into ETH. This, for me, is honestly what I would have changed from the whole Tesla trade back in the day. I was in too much Leaps. I was in too much leveraged stock. I didn't really value just being in Tesla alone. And honestly, I wish I could go back and just have some sort of my position in Tesla and not even touch it, because buying and holding Tesla is probably an easier 100% trade than trying to time anything with Leaps or 90-day options. Who knows? But let's go on to the past moves from Tesla. Basically, the stock alone ran 250% from the bottom. TSLL doubles that, 500%. And Leaps, they're 10xing the stock move. So 2,000%. And honestly, I didn't just do it once during 2024. I did a huge trade on YouTube twice. The fun thing I want to do on this channel today is put in front of you a massive trade I have high conviction on, and I'm going bigger than I've ever gone before, bigger than the Bitcoin trade, the Tesla trade from the past, because I accumulated Bitcoin here and it ran and doubled in price. And this was live on the channel. This was buying Leaps. This was buying stock. This was selling puts. We did it all, and I want to do it all over again. And from that move, again, you're making 200% on BITX, 500% on Leaps. And that is the power of having 3 buckets. Some move faster, some have more higher risk. But if you time those last leverage buckets at the right time, things get exciting. What you need to know is the opportunity around the corner is ripe. We have the Clarity Act on July 17th, possibly being voted in. In August, there's a recess for the Senate, so they're not going to be voting in much. But if this gets passed, this unlocks a lot of clarity around crypto and financials and building around the financial system. So this is where we can unlock a lot of flow in tons of products, tons of new buyers. This is exciting. Not only that, if you look at the statistical bottom of crypto, it's probably around August 1st coming up. Let me break this down for you real quick. So if I go to Bitcoin and I look at top to bottom, here's the top, here's the bottom. This is around usually it's around, let's do it again. Should be exactly like 310 395 days. Yeah, 395. So that's top to bottom of what we call the last 4-year cycle. And then again, let's look at the top here to the bottom, 395 days. So people always say if I could go back in time, if I had the lottery ticket numbers, I would be super rich. And you basically have the roadmap here from the past numbers always repeating themselves with crypto. And we have the chance to just ride winning numbers again. So we're looking for 395 days to exactly repeat here, which would be again October, November, around that time frame. So this is early. This is totally early. You'll probably see me post a video once or twice a month for this play. But the key here is to understand it's 100 days out. So you don't have to be at all in leverage, uncomfortable. You could probably be doing that in August or September. But right now, this is a fun time to just learn how to position in. Learn how to sell puts and get assigned. Learn how to keep accumulating assets. This is a fun time to learn what it's like to just not take a 1% size, but a 10% size, and have a plan to build into it. So I love the fact that this is cyclical pattern is repeating itself consistently, and we're pretty close to the finish line of the bottom. My fear is July 17th hits and we rip, or maybe August and we rip. I don't want to be wrong. I don't want to be early, or I don't want to be late, because the opportunity to the upside is so high. So here's the two things you need to understand. The adoption for Ethereum has gone up substantially. We're talking billions of dollars becoming tokenized. Ethereum is the infrastructure for assets to be validated, verified. They're the rails of assets, real world assets. This is like if you have a bond, you sell a bond, and it settles next day. If I buy a bond from the US government, they give it to me in like 20 days. It takes so long. So at this point, we want to make things more efficient. There's value in having this happen. And honestly, the fact that we're already adopting a tokenization system at this speed is huge, because this shows you usage is here. It's happening. It's being validated for Ethereum. So we need it. We need to use this asset. We need to buy Ethereum. That pays for the gas fees to actually use the tokenization method. We are seeing at the same time the funds are loading up on Ethereum. So Bitmine, SharpLink, a lot of these companies are buying Ethereum consistently. In fact, over the last 3 years, the buying is substantial. It's a straight up curve here. And all of these companies don't sell. They're not buying Ethereum to trade it. They're buying it to hold it. They're becoming Ethereum holding companies. So basically, if you have demand and supply shrinking, you have an imbalance of supply and demand, where you have the opportunity to see this asset explode with the right narrative, with the right news cycle, with the right adoption, which is around the corner. And this is why I'm so excited, because more and more Ethereum is getting taken out of supply, and we know there's not an unlimited amount of Ethereum. It does stop at some point. You can't make more of it past a certain level, just like Bitcoin. But the US dollar you can print to infinity, and that's why eventually we're going to be seeing a lot of crypto be valuable long term. If we pair that with the fact that 33% of Ethereum is being locked up and staked, this is also driving into the narrative that we don't have much Ethereum available. This means basically supply is extremely small. All we need is a catalyst to really kick this off. And this stuff could go absolutely bananas. So there's a supply and demand incredible imbalance if you can catch it and see it now. And I'm all about this type of entry. This is the RSI alignment. And you never have RSIs with this confluence almost ever in your life. This is what we call generational entries, right? We have RSI ranging from 70 to 30, right? 70 to 30, that's the range of RSI. 30 is a generational entry. If you get the daily chart to hit 30, you're damn lucky. If you get the weekly chart to hit 30, you're even more lucky. In the monthly chart, almost never. So if we can get 2 to be at 30, that's a gift. And right now we're at 34. And on the weekly, guess what? We are at 32. We're actually a little bit lower. And on the monthly, well, we're at the lowest in history of 40. So 30 is probably not reasonable to hit. But man, seeing the lowest in history happen right now, with everything happening, that's incredibly exciting. So daily, weekly, monthly are all the lowest in history, or at least the lowest we ever see, and all aligned at the right time. This is amazing. This is exactly what happened with that same Tesla trade I spotted weeks or years ago. One of my best trades for the students was giving them Soxal at $12. And I love to tell this story because number one, we were panicking, we were uncomfortable, but man, looking back, if we just held Soxal from $12 to $300, you'd make 2,000% return. And RSI was 24 at that time on the daily. On the weekly, we were at, or is it over here? I forget the exact, here it is. On the weekly, we're at 30. So let's say sub 30 on both time frames. And on the monthly, we're at 38. So one of the lowest in history on the monthly too. Again, look at that chart. That's huge, huge upside. That back in the day was our worst option selling trade for our students in our program. But what I tell everybody nowadays is when you sell a put and you get assigned, it's a blessing. It's a blessing. You should sell more puts, get more things assigned, because instead of panicking, you should be holding and accumulating, because assets that get this low from the RSI, they don't stay this low forever, and they could produce some of the best bull runs in history when those alignments happen. I'm so pumped because of really just that, and just the fact that we're sitting at that. And this is why I think it's one of the strongest entries in history. Are we early? Maybe. Do we have 100 days to go? Maybe. Could it rip tomorrow and be the bottom? Maybe. I don't want to bet on the exact bottom day today, right? I could be $1,000 in too early. I could be $200 in too early if we're looking at ETH, but I don't care, because at some point in the future, ETH should be moving like $1,000 a day. So I'm not going to sweat $1,000 early. So the key right now, everyone, is be patient, be early, be small, and learn how to scale in. Sell puts if you want, man. Selling puts is the #1 way to get assigned. It's actually a very smart way to accumulate. So the bottom is for patient people that can wait 3, 6, 4 months. They don't need cash flow. This is an appreciation play. This is not a cash flow play. If you sell puts, you might get cash flow, but your goal is to wait and hold and let this thing pay you over years. So again, this is my highest conviction trade. Next week, everyone, I'm going to give you the #1 play to use for this next week. Don't watch or don't miss that video. Don't forget to subscribe and like. This is extremely exciting. And if you guys want to join us inside the coaching program, don't miss out. We are still on a hot streak. We're still closing winning trades, and we're still managing assignments and not fearful. So this is the #1 path if you want to be someone who has an edge, someone that doesn't feel like they're gambling and spending their whole life in front of the computer every single day. This is 15, 30 minutes a week max. And it's not something you're losing sleep over. So this is the greatest system I think you could be using on the internet, honestly. Selling puts with leveraged ETFs is like a superpower. So be safe, everyone. Keep crushing it, and let's ride the next 6 months here together. Make the right decisions. Peace.